This next session will give you insights on technical analysis, key market logics, and trends. Please welcome on stage Shaun Murison, Senior Market Analyst at IG, South Africa.
Hello, everybody. Thanks very much for coming through, and a very special thank you to Finance Magnets for inviting me today. I'm sure it has nothing to do with the IG Gold sponsorship. All right, today we're talking about technical analysis and a rational approach. It's my preferred approach to technical analysis. For those of you that don't know me, my name is Shaun Murison. I'm the Senior Market Analyst at IG South Africa. I've been practicing technical analysis for more than 15 years. It's been a long journey. Something I learned from a book by the name Evidence-Based Technical Analysis from the author Dave Aronson. He put technical analysis into three broad categories. Those three categories I'd like to go through and then focus on one of them in particular, which is the aim of today's talk. The first is quantitative, so a quantitative approach to technical analysis. Now, the whole idea here is you're trying to quantify what you're doing in trading. So you'd be looking at a data-driven approach. You'd be looking at some statistics on the markets. You'd be using your normal technical analysis tools, your moving averages, your stochastics, volatility measures, all things like that. You might make use of something like a backtesting system like IG's advanced charts, which we're looking at right now. And you'll be looking at things like your average hit rate, the frequency with which you're right in the market relative to the frequency with which you are wrong. How much money you're making when you're right, how much money you're losing when you're wrong, how much time you're spending in the market. But the whole aim here is really to quantify what you're doing, trying to find a statistical edge. So you'll backtest the system, and then you'll test that system going forward in the market as well. Really justifying what you're doing in the market. Now, might not be too popular for the next part of it, but the second form of technical analysis I do believe is subjective. Now, when you look at subjective technical analysis, it's hard to quantify exactly what you're doing within the market. Some of the concepts, you'll have different analysts, different interpretations using the same type of analysis. I put something like Elliott wave theory into that, and it's certainly not to dismiss those people that are using the craft and trading well. Just the concept here is that you have two different analysts, experts in the field, seem to have very different ideas of where we are in the market. So where do we start the count? Which wave are we in? Has the wave changed? Are we in an impulse wave? Just lots of variables, lots of subjectivity to that. A lot of areas can be subjective in trading, in that technical analysis approach. Even something as simple as a trend line, and I do use trend lines myself in the market just to gain a general market direction. But if you're using it for a target, it's a variable. If the price moves quickly to a trend line, the value will be very different. If it moves slowly towards a trend line, I put things like Fibonacci in there as well. I know that's an unpopular statement, but where do you draw your lines? Where do you mark the highs? Where do you mark the lows? Which brings us to our third concept in technical analysis. The third category, I think that's a logical approach to trading. Now, when we're talking about a logical approach to technical analysis, we're looking at things that just really make common sense in the market. If I can give you a very brief example of something that would make sense to me, and hopefully to you, if I looked at a chart, and we have a price chart, and we've added volume bars. So the volume bars are really just telling you the number of transactions that are going through in the market. If I see a huge spike in volume, as you see there, more than 2 or 3 times that average daily volume, if you're looking at a daily chart like this is, what is that telling me? Well, common sense tells me that that's institutional interest within the market. How do we know that? Yeah. Sorry. Yeah. Okay, so yes, this is part of technical analysis, and what we're doing is we're looking at technical analysis indications to get logical assumptions from it. And those logical assumptions in this regard is that you've got an institutional participation within the market. Okay. So I can't hear you.
Familiar with the term of order flow?
Order flow.
Yes.
Yes.
Meaning that the amount of executions and transactions that are happening inside the market.
Okay, so this is not looking at order flow, this is looking at transactions that have already taken place within the market. Okay, but it is part of orders, yes. Okay, so how do we know that institutional guys are the ones that move the market? They aggregate funds. So we're talking about banks, we're talking about asset managers, we're talking about hedge funds. And so that is where the big money is, and we do want to pay attention towards that. But if we see the price falling, we see volume moving into the market, substantial volume, and the price there ticks back up after that, shows me institutional accumulation within the market. If we see the market hitting a high, and we see a huge amount of volume moving into that market, and we see a short downturn in that market, it shows you some institutional guys distributing shares. Now, if you are using something like volume, and I know there's a lot of forex traders here, I think it's best applied if you're looking at equity markets, commodity markets, indices, ones that draw your volume from the underlying exchange. I think it's less relevant if you are trading forex, because most of the forex providers will give you volumes of those forex from the actual broker. So you're only seeing the retail trading volume when you're looking at the forex. There's no formalized exchange, obviously, for forex. So I'd like to focus on that logical aspect of technical analysis. And moving on from our first point, there's volume can show institutional involvement within the market. And the very, very first and very simple concept, which I think is often overlooked, is that markets move in trends. You only have to look at a few charts to identify that markets are and do in fact move in trends. Starting off, these are current charts up to the last couple of days or so. There is a chart of gold. We identify an uptrend very, very simply by looking at the price making higher highs and the price making higher lows. Inversely, a downtrend would be considered if the price making lower highs and lower lows. Why does that make sense? There's a very good analogy in the book, Technical Analysis of Stock Trends by Edwards and McGee, where they give the analogy of if you're standing at the shore of the beach and you're trying to ascertain whether the tide is coming in or the tide is going out, you could do that. You could do that quite simply. And you can do that without knowing, the moon's effect, on the sea, that gravitational force. How would you do that? If you stood at the shore, the water washes onto the beach, the highest point it hits, you mark that point with a stick, then the water will wash back into the sea. Next time it washes onto the shore, it might wash past that stick, and we mark that stick, we pull it further back, and now we know that the tide is coming in. All right? At some stage, the water will fall short of that stick, and we push it forward, and now we know that the tide is going out. And the same principle is applying when we're looking at the highs and the lows in a chart. Price is making higher highs, the tide is coming in, that market is moving higher. Price is making lower highs and lower lows, the tide is going out, that market is moving lower. But very, very simply, if we look at the bottom, price moving from the bottom left-hand side of your page to the top right-hand side of your page, you've got an uptrend. Inversely, there's a current chart of Brent crude oil sitting in a downtrend, price moving from the top left-hand side of our page to the bottom right-hand side of our page. That tide is now going out for oil. There is more money to be made trading in the same direction as that general trend than there is trying to bet against it. NASDAQ 100, for the index traders there, US tech, looking very, very good. Clear uptrend. And then the euro dollar. Clear uptrend. Now, we don't need to know exactly what's happening with the, in terms of monetary policy, in Europe versus monetary policy and economic standpoint in the US. We are looking at the effect of what's happening in the market when we're using technical analysis. In this situation here, we're looking, market is moving clearly in a nice uptrend. If you are needing help trying to identify that trend, lots of different technical indicators you could use, moving averages, MACD, trend lines, ADX, that's just a few of them. Now, for me, I like to keep it simple. Something as simple as a 200-day simple moving average on a daily chart. It's not to say I buy, when they cross or anything like that. It's just identifying which side of the market you want to be on when trading that particular product. And it does identify trends quite nicely, certainly that longer-term trend bias. There, euro-dollar, we can see over 2021 into 2022, a downtrend. The price was trading below average. That trend was down. And now in 2023, we see the price is trading above its average. It's in an uptrend. Other key markets, just using that simple form of analysis, that's Brent crude oil again. You see long period of an uptrend where that price was trading above that moving average. At the moment, price firmly below that average. The general bias is to the downside. NASDAQ, same thing. After underperforming 2022, now we're in a point where the NASDAQ is a strong index that's moved into a new uptrend, possibly the early stages of an uptrend. So what is the logic behind using trend? Well, you want to align yourself with the general market direction. That's what you're doing when you're talking about trend. There's more money on offer in that direction of that general trend. And I think even if you're trading and your entry into that market is not great, I think a strong trend can bail you out of trouble. All right. Now I want to take that basic concept of trend and just evolve it a little bit. What are the strongest trends in the market? What are the weakest trends in the market? Where's the outperformance? It's a relatively simple approach, logical approach, rational approach that you can do in markets, in technical analysis, to try identify that. Something I like to use is called a relative strength comparison. Now, those of you that are using technical analysis, please know that we are not referring to the RSI, the relative strength index. That is a different indicator. We are looking at the relative strength comparison. What does it do? Very, very simply, when you're looking at the relative strength comparison, it's looking at the performance of one security against another security. When that indicator is rising, and we'll look at an illustrative example now, but when we see that indicator rising, it's showing you that security 1 is outperforming security 2. And when that indicator is falling, it's showing you that security 1 is now underperforming security 2. So here we have a chart of the NASDAQ. So the top chart there is the price of the NASDAQ, the performance of the NASDAQ. And below we have that indicates the relative strength comparison. It's a ratio, so it's the NASDAQ, basically the price divided by the price of the S&P 500. At the moment you can see that that indicator is rising. So when that indicator is rising, what it's telling us is that the NASDAQ is now outperforming the S&P 500. It doesn't mean that the S&P 500 is in a downtrend. Both of these markets are actually in an uptrend. But what it does tell us is that the NASDAQ, the momentum at the moment is stronger if you're trading the NASDAQ rather than trading the S&P 500. Now the next couple of charts, we're moving the price. I just want to enlarge this indicator so we can have a clearer view of what it is. Just to show you that following this basic analysis in 2022, the NASDAQ was underperforming the S&P. S&P was a better index to be trading if you're trading long, and trading with a view that we expect that market to rise. All right? Now, we can see that in 2023, that relationship has changed. NASDAQ is now outperforming the S&P. It's a stronger index right now. Comparing the NASDAQ to the Dow Jones, if you do try that, you can see at the moment now we've moved into a period of NASDAQ outperforming the Dow Jones as well. So of the three major US indices, the NASDAQ is the strongest right now. So I want to show you a very, very simple strategy that you can use using this indicator, and we've abbreviated to RSC, but obviously that is the relative strength comparison. Basically, we want to build a ranking system in the market, and we're going to use that indicator to help us do that. First thing you're going to need is you're going to need a benchmark index. So if you're looking at South Africa, for example, you might want to use the JSE Top 40 Index as that benchmark for performance. Then what you want to do is you want to take securities, maybe sectors or shares, and you want to compare them to that index. Right, so we know the South Africa 40 Index is in an uptrend now, but what is outperforming? What is hot right now? What is the hot sector? What is the hot stock? So we add the indicator, we look at that indicator, and when we see it's rising, let's say the share was Goldfields, for example, we see the indicator rising, we know that Goldfields is outperforming the South Africa 40 Index or the JSE Top 40 Index. And we run through the list of the securities, comparing them all to that index, and eventually what's going to happen is you will have identified what the strongest stocks or strongest sectors or the strongest stocks within the strongest sectors are within that particular market. And if we look at it right now, this was taken a couple of days ago. We created that ranking system, and if you are trading shares on the JSE, where is the momentum? At the moment, it's sitting with the gold shares. You can see Goldfields, Harmony, Anglo Gold sitting at the top of the list, and then some industrials, we have Aspen and Bidcorp. Now, without knowing the underlying fundamentals, we have a strong gold price, we have a weaker rand, we have favorable conditions for gold miners at this point in time. We have identified what's the strongest, what's the outperformance in our local market right now. But we can also use that to identify what's the weakest. So those of you that are familiar with shorting the market or taking trades with a view that you expect the market to fall, or here are some key downtrends, some of the weaker performers on our local market. Pick and Pay at the top, followed by our miners, Anglo Platinum, Impala Platinum, African Rainbow Minerals, and then Exaro. Yes? Sorry?
Broker offer these stocks within.
Thank you.
Does IG Broker offer these stocks within the platform, as in Pick and Pay and
Yes, IG offers all these stocks. I've run this analysis from the IG platform.
Okay, thank you, sir.
Using it. So we've done a top-down approach using the relative strength indicator, which you can find on that IG platform, and then ranking them. Yes, so IG, in terms of shares and CFD trading, we'd offer shares that are liquid, highly liquid in that, but which is all of the top 40 shares within that index, and then a few out, yes.
Okay, thank you, sir.
From the local account, but we offer global markets as well.
Okay, thank you, sir.
Okay. All right, so just a quick one here is that if you're using this indicator and this type of study in your analysis, the idea is to revise it periodically because things do change. Trends don't last forever, and then you do find different markets starting to outperform, but you want to pick those up quickly. So for me, I like to look at it on a weekly basis, looking at daily charts, running this type of analysis when we're looking at shares. But it's all relative to whatever time frames that you are looking at trading. But when we're doing it, we identify when those sector rotations are starting to occur, changes in momentum in that market, and we are looking for opportunities to buy into the strongest, and we're looking for opportunities to sell into the weakness. Now you can take that concept and you can apply it to different types of asset classes. So we've looked at shares, but you could also add that to something like the Forex market, indices or commodities as well. I've done that. I've used another indicator. You could use another indicator called price rates of change just to get the values of that momentum, but same principle, what we've talked about, the relative strength. At the moment, when you look at global indices right now, NASDAQ 100 is the top performing index right now. European markets are looking quite strong. The CAC 40, the DAX 40, also in strong uptrends right now. And then we have the Nikkei and the S&P sitting in fourth and fifth place if you're looking at a ranking system. Looking at currencies, now what I've done here is I've compared the major currencies, not minors or exotics, and did all different cross pairings of that to get a result. Surprisingly, in the top 5, we don't see the US dollar featuring at all, whether it's the strongest or the weakest. Strongest trends right now, Swiss franc against the Japanese yen, pound against the Japanese yen, euro against the Japanese yen. So what is that telling us right now? If you're a currency trader, well, the yen is the currency that's out of favor. Swiss franc is the strongest. If you are trading with trends, that strongest trend right now is the Swiss franc against an uptrend of the Swiss franc against the Japanese yen. And last but not least, but using that top-down approach there on energies and metals, natural gas, Brent crude, WTI crude, they are the underperformers in 2023. So fossil fuels are out of favor. And then in terms of the uptrends, we have gold and silver, the precious metals that have been doing quite well. Right, just to summarize what we've talked about here, try to limit the subjectivity to your trading. I think try to use a combination of some type of quantify what you're doing, your strategy, your analysis. Combine that with a bit of market logic, a bit of common sense. Respect the fact that markets do move in trends. We've seen quite a few trends that are in place right now. It's easier to trade with the trend than against it. Trade the habit until that habit changes, because they don't last forever. If you're looking for the outperformance or the underperformance in the market, you can use something like that relative strength comparison. Really, really useful and really underutilized indicator. Please remember that it's not the relative strength, it's not the RSI, it's the RSC. And if you're looking at volume in your studies as well, it can identify where institutional interest is coming into that market, and you certainly don't want to align in the opposite direction of that. Great, ladies and gentlemen, we do have a stall. As you know, IG is a gold sponsor of the event. We are running a competition, so please do join us there. You can win there's lots of goodies there. There's hats and there's caps and things like that. But if you enter the competition and guess where the South Africa Top 40 Index is by the end of the week, you can win some box tickets to the South African Rugby Champions, South Africa versus Australia, which is quite nice. Otherwise, thank you very much.